Thank you again, Kaushik, for taking the time to talk to us. Really appreciate it. Just for a bit of background, I'm Sean Amirthan. I'm a senior in C's, and I'm the current president of Lion Fund, a student-run investment group on campus. And Kaushik, you've had an accelerated career in finance and investing. You made principal at Goldman Private Equity by age 28 and director in PE by age 30. We'd love to talk about your career journey and how you got into PE and your sort of keys to career acceleration as well.
Yeah, so first of all, Sean and team at the Lion Fund in Colombia, thank you guys for having me. I'm very excited to be here. So yeah, like Sean mentioned, Kaushik here. So I spent the majority of my career now in finance, in banking first, then private equity. So I'll give you guys a little bit of just a backstory. I started at Goldman in our private equity, in our investment banking group, right out of my MBA actually. Was pretty young when I started that. And then I spent the next sort of 3 years in investment banking. I started in our financial institutions group. So fast forward to post the last financial crisis is when I started in investment banking. So I can talk a little bit about entering your careers sort of in this time frame of a lot of uncertainty. And so for me, it was an amazing experience at Goldman when I started out, because immediately, like right away, I got a chance to lead some of the largest transactions ever in FIG. Again, some of that it was the right place, right time, but it was super transformative to an early part of my career as well as my trajectory at Goldman. There, I led our IPO of Synchrony, which was a $3 billion IPO, which was the largest since Facebook for us. So Goldman was lead on that. I also led a handful of other sell-side transactions for our GE Capital clients. So kind of GE, the company that you guys know, used to have a giant financial services business, which is upwards of $500 billion, I think, at the peak that Jack Welch built up over the crisis. And so post-financial crisis, Goldman was the advisor to help them sell a lot of those businesses. So I led a lot of those transactions for us. So that was really, really exciting from an M&A perspective to start off my career in banking and at Goldman. And then to the question at hand of the transition from investment banking, which I'll get to, I'm sure later on kind of where does that play out as far as your career goes, and kind of what is investment banking like, and kind of my experience at Goldman. But if you kind of shift over to private equity, I decided to make the switch from the sell side to the buy side a couple years into GS. And I joined actually, after recruiting, I actually joined Goldman's own principal investment group, which is our private equity group, which manages about $100 billion of assets. And so there I joined, made principal, again, leading private equity transactions for us. And again, that was a completely different skill set, and we'll get to kind of the differences between banking and private equity for the folks that are interested. And so that was that. And then most recently, I joined Varde Partners as a director to help them build out their private equity business globally. So kind of this was an opportunity for me to work around the world, set up kind of our offices in different continents, et cetera. And as you guys can think, kind of to do that in your 20s, to get to kind of the director level, and that is kind of a crazy kind of right place, right time kind of things have to go right, but also you have to kind of do a lot of things to help your career advance. So I think I'm happy to go through all of that. I think, some of the biggest lessons learned, I'd say, is just, I came into finance without much finance background beforehand, but just being open to kind of new challenges and putting yourself in positions where you can kind of learn the most, not necessarily maybe even, what you think it's going to be. Like it actually ends up being a lot better than that. So kind of keeping an open mind, I think, has helped me a lot over my career, as well as really like taking advantage of opportunities and really jumping in and like, and we'll get into some of this stuff, but really like driving processes and just taking control and ownership of things like really helped me early on in my career to get to kind of where I am. Also at Goldman, I think part of the reason I'm kind of doing this, we'll get to some stuff I'm working on with Elevate. I also got the opportunity to lead our recruiting teams, both in investment banking and in private equity. I was also the chief of staff in Goldman Sachs investment banking for multiple years. So I've kind of seen the whole recruiting cycle play out, both on the banking and private equity side at sort of a large bulge bracket bank like Goldman, as well as a mega fund like private equity. So we can talk about all those things and kind of what we look for as far as candidates go and how you can position yourself in the right way. So maybe that's a good intro, and we'll get to Elevate. I started Elevate sort of as a way to bring professionals who are successful in the industry, back to kind of create resources for the next kind of students, undergrads, graduate students, MBAs, young professionals, for business careers. So that there I'm partnered with sort of professionals from like 50 or so private equity, investment banks, hedge funds in the world to kind of create all of our programming. And then I'm also partnered alongside that with kind of 40 universities at the undergrad and grad side. So we'll get to some of that. And I think that really is the full cycle of how to help people be successful in their careers, wherever they are.
Definitely. Yeah, that definitely makes sense. And I'd love to sort of talk a bit more about Elevate. I remember when I was going through recruiting and when I was a freshman and sophomore, one of the questions a bunch of friends and I had was just, where do you find resources? There's so much out there. It's almost like drinking from a fire hose, and there's good information out there, bad information. So I'd love to hear sort of what prompted you to start Elevate, and how is it that Elevate really helps?
Yeah, absolutely. Good question, Sean. I think it's obviously a lot of you guys are going through the recruiting process. I'm just gonna I'll kind of give you I'll share my screen in a second, kind of show you kind of what I'm working on. But I think as I think about recruiting and as I think about just the overall process, to Sean's point, there's a lot of information out there. There's just kind of all over the place, and not necessarily the most reliable or even high quality. So the goal was to sort of create a platform where we could really bring in real world professionals as well as kind of students or kind of professionals who are going to learn through the course of their career journey. So I think everything that we do, it's not just only recruiting centered. I think it's for the whole idea of your entire career success. And I think a few things that sort of differentiate probably Elevate than anything else is kind of our reach in terms of how many schools and how many firms that we're in, but also kind of some of the the fact that the goal is to kind of open the doors to a lot of these careers that seem very opaque from the outside looking in. So just to guys, kind of since on that question, I think as I think about Elevate, we're partnered. Can you guys see this, by the way, Sean? Can you see the presentation? Okay, cool. So as I think about who we're partnered with, we're partnered basically with professionals from sort of 50 plus top, kind of firms in the world, right? So think banking, PE, VC, et cetera. And the goal is to provide kind of advice as well as resources to sort of people who are looking to enter these careers. So, maybe some of you are looking at banking now, maybe 3 years from now, you'll be looking at private equity. Maybe 5 years from now, you'll be looking at going into, venture capital. I think it's to sort of provide that resources forum for people, regardless of where they are on their career journey. On the flip side, probably the largest now organizations that's partnered up with sort of the premier business, investing, finance clubs across the country. As you think about where we started last year to now, I think we're now partnered with 30 plus universities. I've spoken at all of these universities. I think we have over 3,000 students who are actually part of Elevate from these universities, as well as on the MBA side. I'm very well, I'm also partnered up with all the MBAs. So in some sense, I think it's to make up for sort of this, oftentimes career programming and resources that may not be as, as helpful, frankly, that are existing either at the campus side for these careers, or in the broader internet where you don't know exactly the quality of information you're getting, right? So I think it's kind of that all together. And the way I think about it is sort of, one is on the advice side. We do panels with these professionals, and we do all this YouTube sessions, all that stuff. And you guys, I'm happy to add you on. I think I talked to Sean about that. The other way to do that is really we created these masterclass trainings. So the other thing, as I was looking at my experience at Goldman, is a lot of people came in and didn't really have a great understanding of the job itself. And so what is it like to be an investment banker? Or what is it like to be a private equity professional? And so the goal is to kind of create sort of this comprehensive training that's fully taught by professionals. So all the professionals, the firms that you see on the right, those are the professionals that are actually teaching this training. And for anyone, I think at Lion Fund, Sean, we worked out a way where we can kind of give a really kind of huge discount to you guys if you guys are interested, but we've done that for banking. I've done that for private equity. Again, these are the sorts of firms that where people are teaching basically everything you need about these careers. We've done that on the VC side, actually working on it. We have kind of 5 managing partners from pretty big Silicon Valley funds kind of helping us through this. So it's effectively bringing in that professional perspective and resources to people that are interested in their career journey, and kind of think about it that way. And a couple other things on the networking side. which is sort of building the largest sort of networking pool of candidates or just students, so that we're kind of facilitating one-on-one networking. So people from Columbia get a chance to meet people from like the Harvard Investment Club or, you know, the Duke Investment Club and other things. I think networking is such a huge component of your careers that I'm a true believer in that, because so many people that I've worked with over my career, I've gotten to know, and I think it's such a strong connectivity there. And then finally on the recruiting side, you know, I think we're working with a handful of mega funds, you know, investment banks, et cetera, to help them fill out their, you know, internship classes, recruiting classes, full-time classes, lateral hiring, et cetera, based on kind of the people that we have. So I think that's kind of a summary, Sean. I think we decided, I believe we'll send you guys information, but if folks that are interested in the investment banking thing, I think we're going to do like a 75% off for anyone that's interested here, and we'll send out details. I'll say one other thing. If you guys are interested in learning more about Elevate and sort of being on, a lot of you guys have already added me on LinkedIn, so I, you know, look forward to connecting with you on that platform. I'm going to share this kind of Google Docs, so you guys can just put in and join kind of the other, whatever, 3,000 people, students that are kind of get access to this information. And then happy to add you guys on to the listserv. And so that you guys can get information on it. So I just shared with you the link on the Elevate front. So I'm super excited about that. So we started that last year, and within like the last 8-9 months, that's kind of how big it's grown. So I'm super stoked about the stuff we're working on. And also, oh, by the way, we just had folks like Mark Cuban on the platform a couple of weeks ago, Scaramucci, Anthony Scaramucci, some of these guys on. So it's good to get market validation, I guess, for Elevate as well. So I'm excited about it. I'm happy to talk about it more to people that are interested. You can definitely add your name. We'll get a lot more information, like you'll be added on all the programming. But yeah, I'm happy to answer any other questions about that as they come up.
Awesome. Thanks again, Kaushik. And I guess just to sort of pivot back a bit, a lot of the people on this call are first years, or they're starting to think about junior IB recruiting, and some people are seniors on this call and they're thinking about PE recruiting. So I guess maybe to make it less intangible and sort of far-fetched, could you talk a bit more about you know, your early days at Goldman and why you sort of ultimately decided to pivot to PE?
Yeah. So it's a good question. I think like I have so many stories that I'm happy to share with you guys on kind of my associate kind of junior banker days at Goldman. I think a couple of things that strike out to me the most, I would say, is just we'll get to recruiting in a second, kind of what types of candidates these banks are looking for and how you can position yourself really well for that. But I think as far as the work itself was some of the most challenging. Like there's 3 things that I think stuck out to me about working in banking, but also a place like Goldman. I think you got to work on really complex, you know, problems. So when people ask me like, why would you recommend maybe going into a banking or consulting maybe to start out your career? And I think that the answer could be, if you aren't quite sure yet or sort of figuring it out, what part of the world of finance you're in, et cetera, it was usually, you know, beneficial for me because as a junior banker, you're working on like huge market moving, like front page of the Wall Street Journal type transactions that I don't think I would have ever gotten a chance to work on otherwise. So I would say kind of the impact that you can have in the business world and in the broader finance world is fantastic. So that's probably one big takeaway from a lot of the stuff I did at GS, where every meeting we would have is with the CFO. Like every meeting we have is with the board or the CEO, et cetera. So it's kind of, you're working on very high profile stuff. Right? So that's kind of one thing where just the learning opportunity is fantastic. I think the second thing is that you, as a junior banker, I expect you guys, if you're analysts on my teams or associate on my teams, to really like own and have ownership over the model. So it's kind of, or whatever work streams they're working on. So I think that really taught me early on in my career to really like take that ownership, take it seriously, and then really build the hard way that's sort of the skills that I need to be successful later on in private equity or other careers, right? So I think the best way to do that, I've learned over my career, and I've seen successful analysts year over year, kind of having seen this 6+ years over at Goldman. I think that ability to take ownership of whether it's your financial model or whether it's, you know, just whatever analysis you're working on, there's such a huge difference between how much we can learn. And I think Goldman just gave me such an opportunity to do that. And the third, I would say, is just a camaraderie, right? I think when you're a junior banker at some of these types of places, you get to meet other really awesome people that end up maybe staying in finance, maybe staying in banking, maybe going to do something else, but they're just some of the most amazing connections that I've met. And again, I keep emphasizing the idea of networking to you guys, but for me, that was huge because you sit in the bullpen with these people and just kind of work all day or you know, whatever, all night. And then you just get to learn a lot about how other people think solving problems and et cetera. As far as like the cons of investment banking, look, there's a few. I'll just hit a couple things that I thought early on is, one, it's a very client service business, right? So you are kind of at the behest of the client, right? So the client wants you to do something, you kind of have to do it. So at the junior level is less relevant because I think it's still like a lot of the analytics that you're so responsible for. But I think that was one thing that certainly I think I wasn't sure about long term. I think the second thing is just, you know, I think the learning can tend to plateau. I think the way you move up in investment banking is you start as an analyst, then you go kind of, you do all the analytics, you're responsible for the modeling, et cetera. And then you go sort of, you're promoted to an associate or you leave the firm, and we'll get to that kind of the private equity path. But if you're promoted, a very small group of people get promoted. And so if you get promoted to associate, then you're responsible sort of for not just the analytics, but also to kind of lead the team and lead the execution of certain things. And so that's a different sort of responsibility. And then sort of you get promoted again. At that point, you could go get your MBA, or you can kind of stay at the bank, et cetera. And then you get promoted to sort of a vice president principal level. There, you're starting to develop relationships with clients and sort of starting selling the firm, right? Selling Goldman to the clients. And then finally, like the director MD level, where now you're kind of responsible for P&L, you're responsible for business division, you know, you're responsible for like, you know, investment banking, or responsible for some part of investment banking if you're kind of at Goldman. That's how I kind of think about it. So along the way for me, I just decided that kind of I wanted to go into private equity, like the investing side, which to me seemed like a different sort of challenge. And so that's kind of why I made that transition. And I think on the PE side, it's different, right? The PE side, a lot of you guys, if you go into banking, you'll join right out of your banking program probably in a couple of years. And there you kind of operate back as an analyst and kind of have to go through the motions again. But it's similar in that it's like the nature of the analysis might be, or the work might be a little bit similar, but the actual nature of the beast in PE is so different from banking. And we can get into that as well. So let me pause there, Sean, and see if that answered that question.
No, definitely. Yeah, that definitely answers it. And I guess as you touched upon earlier, what does recruiting look like for both? And obviously it's changed a lot, but you're definitely tapped into, you know, the changes that are happening. And I guess if you could talk a bit more about that, that could be helpful for people too.
Yeah, I definitely. To your point, like I think just by virtue of being part of Elevate, I think we had a session before the summer where I had sort of 200 undergrads who were all going to different banks, sort of our networking session. And I think I got to hear a lot about, you know, how that whole process went, how the summer is looking, how the full-time looks. And look, I think even like taking out, by the way, I should remind you guys, if you haven't, I shared the Google Sheets, and Sean, you can even send it out, but feel free to definitely add your names if you guys want to be on the Elevate and some of the resources there. But I think like I think that if even take COVID out of the equation, I think the recruiting for investment banking sort of, it gets pushed earlier and earlier every year, right? So now we're looking at kind of your sophomore year, maybe, you know, late sophomore year, early junior year is kind of where most people recruit for the next year's class. I would say for the banking folks, I think it's important to get two things. One is really start building your networks, right? I think what I mean by that, if it's upperclassmen who are going to some of these banks or funds that you're interested in, number one, and then it's alumni or other people in the industry who you can start connecting with, that'll sort of give you this bigger picture of what it is like to work at that firm, what it is like to work at that fund, but also kind of try to get you on the short list of opportunities, because you kind of flip it on the other side, right? If you look at what we would do on the you know, recruiting teams at these banks, like I might get 200 resumes or 300 resumes from Columbia for any given year. Like, how do I go from 200 to 30, right? It's really hard to see kind of who's going to get an internship where all the experiences look very similar. It really becomes a question of, all right, who from the team has met this person, or kind of what is their impression been on this person? And so that's part one, right? So what is the networking impact this person has had? And then the second thing I really focus on is start building any sort of experience that you can get, right? So it's like night and day on your resumes if you can put in some experience that's even ancillarily business or finance or whatever related, versus not having something like that. So find something, and we could talk about what those some things are, but that's another thing we would look for. Like, what are the things that they're doing to differentiate themselves basically from the crowd? Because like I said earlier, how do we go from 300 resumes that we're getting to like 30 or 50 or whatever for the shortlist, right? So I think that's the key there for the banking folks. I think on the PE side, look, again, having done PE recruit, I think over my career, I would have done over 1,000 interviews of candidates, both in banking and PE. So I could really like pretty much tell you guys within like the first 5 minutes if people are going to get an offer, or, you know, not roughly, but kind of what are their strengths and weaknesses. I think one of the things I've definitely seen on the PE side as we've done it, again, less for you guys. Maybe when you start thinking about full-time or even, you know, lateraling in, it just becomes a little bit more about kind of what is that cohesive story you're able to tell about your own career? Like, why are you interested in PE? Like, what do you think PE is going to do for you? That's number one. Number two, why? I think this is the most important thing. Like, if you don't listen to anything else, listen to this. It's like, why do you think, or why do you want us to convince us that you're going to be a good investor? So I touched on this briefly earlier, but private equity is all about how becoming a better investor, right? So, or becoming a good investor, or proving that you're a good investor. So the reason why firms hire you guys and, you know, pay X, Y, and Z for PE candidates is because I think they want to see beyond just the analysis, like what are the sort of judgment calls, what are the, you know, implicit investing mindset methodologies and just kind of alpha this person is bringing into the fund or to this role. And that's the thing you're going to be really evaluated on. Again, private equity recruiting these days is very early, right? So we're looking at kind of fall of when you start your banking career. So I think it's really proving to the firms, you know, on the other side, us, like, why does it make sense to hire you as a private equity investor? You know, what do you add to the table? What are interests you're interested in? What is your view on the world? Like, what are certain things that you're taking? How would you evaluate companies? Like, whatever those questions are, you know, there's like 10 questions that I always ask in private equity interviews. And I think just kind of giving us a sense that, like, you know, you kind of know that. But then obviously there's also this whole, you know, there's also this whole technical component that you need to really convince us that, like, you know, you can do the technical analysis, like the, you know, leverage buyout modeling and all that stuff. So for folks that are interested, like the training we talked about, they're basically, the goal is we ask all these professionals, like, what are you looking for in banking candidates, right? So what are you looking for in private equity candidates? So you'll really get a flavor from them on kind of what people are looking to hear, as well as how you should position yourself for these careers. So yeah, let me pause there and see if we can go to the next question, Sean, if that makes sense.
Definitely. I think it'd be best if we open it up for questions. I know people would definitely like to ask a couple of questions. So yeah, if anyone has any questions, just feel free to unmute yourself. And
yeah, I see Nikhilesh's hand has gone up. So we'll start with, I see a couple hands actually, but we'll go with you first. And again, a reminder to fill out the Google Sheets if you haven't.
Hi, Kaushik. Yeah, I'm Nikhilesh. I'm also a member of Lion Fund. I had two questions actually. My first question was, how do you see kind of recruitment differing between, you know, the bulge brackets and the boutique banks? And, you know, if you could kind of walk me through kind of different strategies and approaches for both of those. And also, you mentioned, you know, the importance of networking in terms of, you know, helping accelerate your career. How would you say that you uniquely positioned yourself to form, you know, really meaningful relationships with members of kind of the finance community? Yeah, if you could walk me through both of those, that'd be great.
Both really good questions, Nikhilesh. I think both are really good questions. Let me start with the second question. So, sorry, first question in terms of like, how do you, and are you like, what year are you kind of,
So I'm a sophomore right now. So considering recruiting for like banking next semester. Yeah.
Got it. So let me, let me say a couple different ways. So kind of this question of kind of bulge bracket versus like boutique type of banks. Look, I think at the end of the day, as I look at kind of people, if let's say private equity is an end goal or whatever's your end goal, you should just try to get to go to kind of the best firm you can get into, number one. Number two, also where you think you'll get the best set of experiences. And then number three, where you think the exit ops are going to be like the most favorable. Again, if you are at all concerned about these things already, right? So I think if the exit ops is less concerning for you, don't worry about it yet. But I think generally, right, your banking experience is going to be somewhat similar, I think, in a lot of different cases. In other words, the crux, if someone comes and tells me I was an investment banking analyst, I kind of know 80% of the work that they did. So whether it's on real deals or live pitches, you kind of know they're doing financial analysis, they're doing, you know, SIMs, they're doing sell side processes, IPOs, you know, buy side processes, maybe some sort of more technical analyses. But generally, no, it's less so on the buy side. So we'll get to that later. But I think when someone comes and tells me there, so I wouldn't stress out way too much between like, oh, I really need to go to this bank versus not. Because guys, you know, I sit on this side and it's funny, if you look at some of the Elevate training and you hear from professionals, every single professional says recruiting is like super haphazard, right? Recruiting is just so random. So you just don't know how things are going to pan out. But how do you position yourself, right? So your question on bulge bracket versus boutique. in my mind, there isn't as much of a difference, honestly, between those two things, because, you know, sort of like, I would never think of banking or even, you know, just like Columbia is not necessarily a destination, even though it's a great university, it's kind of what's next, right? So I almost kind of think like wherever you go, you have to have a little bit of your mindset into what are you going to use that platform to do in your career, right? So it's not like the first job is not like the end of the world by any means, right? So like, look, I think potentially some, if you think of learning opportunities, yes, presumably like the top, you know, if you look through the league table, yes, like that's an indication of, you know, how the reality is, that's an indication of how, you know, much deal activity as it at these different banks. So you can take that as a metric, but I think equally important, I think you should take the metric of, look, what are industry groups you're interested in? Like if you get an offer at 2 different industry groups and you really like healthcare versus technology, go join the industry that you're actually interested in, where you're uniquely positioned to actually add value, right? So less so into kind of names. I think everyone ends up going and kind of going down the name path anyway, but I just kind of challenge you guys that there's a couple other things you want to kind of think about as a holistic picture. And as far as Elite Boutique's concerned, like, look, I had on my training, like a principal from Centerview, someone from Evercore. And so like we talked about kind of that boutiques versus, you know, banking, whereas on the Bulge Tobacco side, I had an ED from Morgan Stanley on, me from Goldman. I think we had like 4 or 5 people from Goldman overall in the trainings. I think generally the sentiment is like, you could be successful regardless. The elite boutiques or boutiques in general probably give you a little bit more of a diversity in experiences as a younger analyst, right? Or an associate, where you actually you probably are working on a lot of different things. Whereas in banking, you're probably just doing the analytics. So I think that's one big difference. You probably also like have more of an opportunity to step up at a boutique, whereas in Goldman, it's really hard because there's so many associates, right? It's hard pressed that you'll find like that there's no associate. Whereas a lot of my, you know, peers or people at, you know, some of these boutiques like Evercore or Centerview, there's often teams, it's just an MD and the analyst. Like there's a bunch of firms like Liontree, all these firms that are fantastic, that it's very, very, very tight. So you do get to do a lot more work. So I think that is actually really, really important as well. And then finally, I think exit ops are important. I think for you guys, if you're really, really concerned about that, I don't think you should be like super duper concerned about that right now, because things just play out in a way that they do that's often out of your control. I think if that is of concern to you, investigate like who and where firms and people end up in these careers, and kind of what that makes sense for yourself, and kind of maybe use that as a way to think about it. I'm a firm believer in like, look, I'm a firm believer in that, like wherever you start has like little to no bearing kind of how your career goes. Like my own sake, I came from a non-target school. I was an immigrant. I moved this country in like middle school. I went to a non-target undergrad. I got a finance offer in undergrad, but the financial crisis hit and I lost my finance offer. So I like, when I was a senior, I didn't have a job. You know what I mean? So I think for me, then fast forward a couple years later, I'm obviously, you know, I made principal, but in my 20s, and made director before I was 30. So for me, like, I didn't let that kind of stop me. Obviously, you guys are coming from tremendous schools, so that schools that already gives you a leg up, but like, don't stop kind of working and going after like the things that you want, because, you know, it's a continued kind of growth that I would think about, growth mindset. So kind of don't just settle, or don't ever feel like you're too comfortable or complacent maybe in a place that you are. Maybe that's the first answer. Second question, remind me of your second question.
Second question was regarding like networking and its importance, and your approach to it. Yeah.
Yeah. So look, I will admit, like I'm very upfront and honest in these conversations. Like I will admit, I think when I first started Goldman, I was pretty like complacent. I was like, I think I was pretty complacent in the sense that, oh, so it's okay. I made it. I'm here. You know, I'm very fortunate, but I don't really need to network with a lot of people. Like my first year, I was pretty heads down. You know, just cranking, working. And I think, you know, in retrospect, I wish I hadn't been that way all the time, because I think it has been such an amazing, and I think since then I changed that up. But I think for me, if there's a lesson I give you guys, is just continually think about sort of those relationships that you build. Because when you kind of think now on the private equity side, the bankers that I hire or the consultants that we hire, you know, whoever it is, often is people that I've known for 10 years in the industry, right? It's kind of because I hire them or they hire us or whatever, because we have those relationships. So for me, networking, initially, when I started my career, I think it was very transactional. I think since then I've learned, and this is kind of a key that I want to give you guys in sort of secrets of networking, is that it's about trust and it's about relationships. Like just imagine 5 years from now, you want to work with someone comes from Lion Fund or from CFIG or, you know, one of the organizations in Colombia. There's this commonality like that you share, that you're like, okay, I trust this person, right? That's all networking is. Like, you trust this person, which is why I think with Elevate, I'm overemphasizing networking. Like, you know, all this stuff that we do with professionals and as well as with peers, I think with this, like the largest kind of peer network where you guys all get the opportunity to meet other students interested in finance careers across all these universities. It's like an immense opportunity that I wish I had, starting out my career. It's turned out fine for me in that like I've been able to build a really good network and have all these professionals. Basically, like all the professionals who are involved in Elevate, A, believe in the mission, but also B, are people that I know, right? So all these people in all these places are because of the networks that I've been able to build. So that's just an example of kind of your network. So I would say just kind of continually focus on it. At different points in your career, it's going to be more and more important. It's just really hard to start networking when you need a job. So I would just say, you just kind of start networking and keep that going and make it a part of your thing. I think with Elevate, we're trying to do it where almost like on a bi-weekly basis, we're hoping to connect people and learn someone completely new from a different part of the world, part of the country or different school. And I think that's a tremendous opportunity because who knows, I think next year you guys may all go to the same bank or you may all go to the same private equity fund. And it's just like it's a small world, man. Like, especially like GS, I just noticed like there's people everywhere. And so you kind of you have to acknowledge that like Columbia, like Goldman, some of these places, I mean, all these places are just small worlds that kind of build on themselves. So I'm very passionate about networking. And I think that's kind of what I want to pass on to you guys.
All right, awesome. Thank you so much.
Got it. Good luck.
Thanks.
What else?
Hey, Kaushik, can you hear me?
Yes, is that Jeremy?
Yeah, sorry, I'm on my desktop right now, so I don't have a camera, but thank you for being here. I'm a junior in Line Fund, and my question is, thinking about directly going into the buy side versus, a 2-3 year banking stint, like what are the considerations for you if your primary goal is to be an investor in the end?
Yeah, it's a good question. So before I answer that question, I'm going to direct you to one of our Elevate workshops there. This is recently, I talked to a partner at Warburg Pincus, which is a private equity fund. And I asked him this question along the way. So afterwards, Jeremy, you can listen to it and maybe go to the part of the thing that he says. Look, I think I get this question asked a lot. I think this is probably one of the top 5 questions I've gotten asked in all of my universities, kind of the whole idea of whether to go to the buy side or not. And I think the answer sort of depends on the person, right? And let me kind of explain why. Let's just lay out the pros and cons, right? So when you think about investment banking, like I said earlier, banking, if you start out in banking, it's a very streamlined experience. So whether you start at Credit Suisse or you start at, Jefferies, or you start at Goldman Sachs, or you start at, Raymond James, I kind of have a good sense of what you guys may have done as an investment banking analyst. So I think that's a good thing. So whether you're applying to MBA schools or you're applying to buy side roles, it's sort of a starting place. I think on the private equity side or buy side, look, I think every fund is just so different. So I think you have to do a lot more diligence on your end on the types of funds you're targeting and the type of job that you're going to get, right? So what I mean by that, right? So a lot of funds are, there's a couple different metrics here. One is kind of where they invest. So kind of, are they private equity, like pure play, LBO, leverage buyouts, fund type of funds? Are they more, so even there's kind of a mega fund route, and then there's sort of a middle market, and then maybe an upper middle market route. And then you go to kind of growth funds where you're not potentially, you're not taking like a majority stake, but you're taking a large enough stake in the company where you're meaningful, or there's sort of, so the venture side, where it's, again, it's it's private, but it's smaller on the investing side. That's all on the private side. And then you look at the public side, there's, the hedge funds, the distressed funds, and all that stuff in the world, right? So kind of first figuring out if public versus private is something that you're interested in. And there's a huge difference there. I interviewed someone from KKR who came from Goldman public into KKR private, and he talked about kind of his experience. So you guys can go back to Elevate and look at that conversation. But I think my general view is, look, if private equity or private investing or buy side, as you guys call it, is kind of where you want to be, I think you should, and first make sure that that's true, like make sure you understand kind of what you're getting yourself into, such that you don't lose the kind of opportunity cost or option value of doing that. But if you're doing that, I think number 2, like run at it hard, like get an internship, like work there for the summer, and try to figure out, and if that is what you want to do, I think absolutely do it. I know tons of people in Elevate who've gone on to buy side roles because it's the right fit for them. So I don't necessarily think that banking to PE is like the only way or the most trusted way. I think if you think about some of the cons, right, it's harder to get into, right? Kind of the top funds, it's really, really competitive. So I would say maybe in Elevate, I would say maybe like 10% of our Elevate people in the last year have gone across all my schools, have gone to mega funds right out of undergrad, right? It's very competitive. So, and kind of you're talking about the top 20, 30 schools. So I'd say that one thing is super competitive. Number 2, I think part of it's like, if you decide to pursue that for your summer, you do lose some optionality of like getting a full-time offer there back, right? Because recruiting is very summer driven. So if you kind of choose to do that your junior year summer, you may lose that optionality of coming back. But at the end of the day, like I think unless you have, Jeremy, you want to talk about something super specific, I would just say, if that's something you want to do, give it a hard run, see how you assess and kind of how you stack up. I wouldn't like discount or throw away the sell side route, because it may be kind of a like apples to apples, like a better sell side fund may be better than kind of a not so good buy side fund if you think about it. And so I kind of say, depending on you, number one, kind of what you want. Number two, depending on kind of what are the opportunity set looks like and how realistic it is for you to get there. But if those two kind of check out and you're really still interested, I'd say go for it. You know, why not? I mean, the other thing I want you guys to know, like in the long scheme of things, 2 years is not that long a time, right? In your career, right? If you think about your careers being 40, 50 years, you know, I wouldn't stress out too much. Like you make a decision based on what you know. Let's say it's the wrong decision and it was like the bad choice. Oh, well, like you learned something and you figure it out. Hopefully your internships tell you that before you kind of, you know, lose it 2 or 3 years in something. But again, you will all discover that careers that you start out with, I think of all my Elevate people, like let's say someone goes into investment banking, I'd say less than 25% are actually there 2 years later. So, right. So just think about that, right? I think it's just a place, it's just your early career should be a lot of risk taking, should be more like exploration, as well as at the same time, like trying to get as far advanced as possible, which is why you go to schools like Columbia or go to, you know, top firms to do that. Just kind of keep both of those things in mind, the whole risk reward and risk opportunities component. So I know, Jeremy, I didn't give you like a straight away, like this is what you need to do. Feel free to reach out to me on LinkedIn or Instagram on our Elevate account. I'm happy to help you, like if you have more specific questions, but that's kind of how I would think about your decision-making process. Is that helpful?
Yeah, great. Thank you for the thorough answer.
Yeah, of course, you got it. I will again plug the spreadsheet or the Instagram stuff. You guys can fill your name in if you haven't yet. But all the guys that have, all the guys and girls that have, thank you. All right, what else? Oh, I see a hand. Danny.
Hi. In your opinion, would you say that, you know, like trader jobs will disappear in the near future because of like automation, stuff like that?
Yeah, good question. Okay, so this is a good question. So little known fact, I actually was going to go into sales and trading. That's the job that I lost when I was in undergrad. I was in sales and trading. Believe it or not, I was I think I was in mortgage-backed trading desk, I guess. So you guys know how that story ended in 2009, 2010. So I think like I don't think so. It sort of depends, right, Danny? And I think and I had on a quant from Citadel actually on one of my other podcasts. I'll send you guys a link to that here. He went to Harvard. He was also an Olympic like rower, and I sent you guys the YouTube link to that. So I think one of the questions, this is what we kind of debated. I think it's incredibly difficult these days to kind of break into some of these like elite trading type roles. And that's kind of the first thing I'd say. You kind of need sort of a quant background already. I think as you think about the sort of sales and trading, I think that's maybe, I think maybe I'll clarify. I'll give you both answers on this. These are sales and trading versus kind of more quant type of roles. I think on the sales and trading side, I think the nature of the work is going to become much different. So I don't think that like banks books are going away. I don't necessarily think that, you know, like the function of sales and trading is going away, because you do need sort of these entities to kind of aggregate and execute these large scale transactions across, you know, equities, et cetera. There's going to be different ways to do that. So a lot of the focus that we spent at GS, at Goldman, when I was there, I was on kind of how to better automate, how to better use the technology to kind of still use a platform. So I think people still come to Goldman, or people still come to these firms at a high level because of the relationships that they have on both sides of the market, because of their ability to, you know, client service, because of the knowledge in the market, because of the interconnectivity, because of, you know, because of the quickness, speed, all that stuff. So the nature of the work, I think, is going to change, and a lot more, you know, where a lot of these are very automated, right? So the sales function when I was in sales and trading during my undergrad internship was like the sales guys would and girls would be on the phone the whole day with like potential investors and say, hey, can we figure this trade out? Now it's much more like, hey, just do it online. But instead, I think now a lot more time is spent around how do we optimize this book? Like what else can we do to like hedge our bets, right? So I think there's this whole component that wasn't as kind of delineated before. So I think the challenge is, though, it kind of has to then match into your skill set and your interests. So the direction of the industry is going towards obviously much more automation, obviously much more, data driven. So if that's something that you're actually uniquely differentiated by, I think you could still pursue that. Largely, I think the reason I didn't end up going to sales and trading perhaps and going back into it was because I felt like I wanted to understand like companies at a higher level or strategies and operations as opposed to like financial products. And that's, I think, at the end of the day, why I didn't go into sales and trading, but obviously everyone here is going to be different. And I think on the quant side, there's just so much going on. I think if you have time, you should go listen to that Citadel one. And he's been there for 4 years. He's one of their top traders at Citadel, like one of their top quants at Citadel. And he kind of was talking about how there is this sort of exodus, or sort of a, kind of mean reversion to the top. So the view was like beyond the top kind of 10 funds, I think there's a lot of the middle guys, I think are going to probably go away over the next 5 years because there's just so much economies of scale where you think about the amount of data, the amount of, like just efficiencies that can be achieved for some of these large platforms. So you see guys like Citadel, you see guys like, BlackRock, all these folks in different parts of the market just continue to aggregate assets. So your question on where are the areas that I see most at risk, I think I see more of the kind of traditional sales functions at risk. And I see a lot of the sort of middle tier sort of trading quant type shops really being at risk because the amount of data, amount of tweets, amount of information these guys are aggregating at a place like Citadel and some of these Jane Streets and these places is immense, right? So if you're genuinely curious about data, if you're genuinely curious about that part, absolutely pursue these. I think the sales and trading like books that we read about, like, Monkey Business or Boiler Room or some of these things that we've seen in the past are just not what the world is anymore. It's dominated by quants, it's dominated by trading, it's dominated by data, it's made, all this stuff. And so I'd kind of say if that's the world you're interested in, I would just kind of, it's almost like a brave new world and also see that the next 5 years ahead, because you never want to join an industry where you kind of are going off the last 5 years track record. You kind of want to join something that's the next, where you see the next year outlook is going to be. And I think that's where the outlook is going to be for that industry. Does that help, Danny?
Yeah, definitely. Thanks a lot.
Excellent. Of course, man. You caught me in an area that isn't per se my expertise, but hopefully that was helpful on the trading side. Thank you guys for filling this out. I guess the resources for you guys, so you could fill out the Excel if you want. And yeah, so what else?
Hi, I guess I have a question.
Yes.
First of all, thank you so much for being here.
Sure.
Apologies for not being able to turn on my camera, but I'm Kathy. I'm a junior, also part of Line Fund. And I guess one question that I have is I've just finished banking recruiting, and I feel like recruiting for private equity and everything else is so accelerated now that I kind of have to think about, what I want to do for the rest of my life. And I'm still trying to figure that out. So I guess, can you speak to how you knew you want to do private equity and kind of what resources Elevate has to kind of expose you to different industries that you can pursue after banking?
Absolutely. I'm so glad you asked that question. First of all, Catherine, nice to meet you. First of all, congrats on kind of going through, I guess, part of the recruiting process. And it's a really good question. And I'll kind of answer in a couple of different ways. So before I kind of get to the Elevate front, I think for myself, I actually think this is where I was a little lost in my career, right? When I was kind of in banking, I'm being honest with you guys, right? I sort of didn't know if I wanted to continue. Like it was going to be foolhardy for me to like leave Goldman. I'm like, why, who would do that? Right. I think so for me, it was like a little bit of like uncertainty. And also I think PE was, look, I think the way the PE recruiting, and I could say this now because unfortunately I'm on the other side now where I'm recruiting all you guys or we're all recruiting you guys into PE, but it happens so early that you don't really have a chance to really investigate a lot of these careers. So the question comes, Catherine, your question comes about, it's a really good question because I think the best place to learn is from people who've sort of been in your shoes. And I think that's kind of how I built up Elevate as well. But more broadly, I would say like, find people that are 2 to 3 years ahead of you, maybe the banks that you might be going to, or people that have gone into, Columbia, into other things, and really try to understand, what were their rationale. And I'll give you guys, having done probably like, a bunch of these conversations, and I will point to a couple of specific resources on Elevate. Most of the resources on Elevate, by the way, are free for students. But I think I think one of the things you should really think about is, I like to think of banking as sort of, execution, straight finance, whereas private equity is a little more like finance and operations. And what I mean by that, and I think So, but it's really important to know though, at the junior level, you may not get to see any of the strategy and operations side on either side, right? So in banking, when you think about it, like whatever group you're whatever firm you end up joining, your first 2 years are going to be like literally like the hardest 2 years of your life, because you're managing these like large multi-billion-dollar transactions for these firms and these clients, et cetera, with all these senior partners involved, all these stakeholders, that you kind of feel like deflated. Like you never feel like you actually have a hang of what's going on. Like all these terminologies are all new, et cetera. So I think a lot of people end up leaving banking because they're just a little like, it's like drinking from a fire hose all the time for literally for like a year and a half straight. By the time you actually understand, like for me, by the time I think I got a foothold in banking, I was already recruiting for private equity, right? So I think for me, it was like, again, one of those things where it's a little bit, you have to sort of approach that with that mindset. As far as your question on kind of resources for PE, look, I think under Elevate, what's really awesome is I think PE is an area where we've really built out so many resources for you guys, because it is an area that is probably so underrepresented across anywhere you'll find on the internet, because people like, you're just not going to find people willing to talk about their experiences at like some of these firms, in kind of an open forum or where it's kind of reliably do it. Right. So I'd say I'll point you to some of the areas, but, or you can reach out to Catherine offline, and I can certainly send you an email with a lot of the areas. But what we've tried to do on the Elevate side is bring in sort of professionals, right, from these firms like Blackstone, Apollo, Centerbridge, like whatever those firms are, KKR, Warburg, and really get a sense from them on like, how did they handle their lateral? What were they thinking about from going from banking or consulting into PE? And really get that perspective from people who are literally 3 to 5 years ahead of you, because I think that probably is the best place to learn. As you then think about kind of the other point you brought up, Catherine, is like this whole, the next 5 years, 10 years, it's like, you're just overwhelmed of like, oh my God, there's so much other stuff going on. I would almost just say like, maybe take it piecemeal, right? So you kind of go into your banking recruiting, see if you like it. Most people end up going to banking and they recruit for private equity just for either it's FOMO, or it's like, hey, the buy side is better for X, Y, and Z reason, or it pays more, or you get a different experience, whatever. I encourage people that are looking at the buy side to go and look at the buy side, because the difference in private equity or even the kind of public side is you have to think like the owner of a company, right? So again, what I mean by that, as a banker, you're an advisor. You don't actually like, you give an advice, but then after the deal's done, you move on. But as a private equity investor, you are like looking for new ideas. You're diligencing that opportunity. You're then doing the deal, like running execution on the deal, and then you're owning that company for 5 years, right? So it's a different level of ownership and different level of like work that you're being asked to do. So as a result, I think you feel probably a little bit more like, responsible for your end product. So I think that's one thing that attracted me to private equity. So anyway, like a long and short of it is, I think it can be overwhelming. I think my goal, hopefully with Elevate, is to like try to bridge a lot of those gaps. I think, especially if you look at kind of the PE training, and no way obligated to take any of this, but I think that one where we really like, we do have 6 professionals kind of talking through their experiences, everything you need to know about private equity. But beyond that, I think all the resources that I've tried to kind of put together for Elevate has been from that perspective of successful professionals who've been able to navigate this path that can kind of hopefully lead you guys on this path as well. So Catherine, was a loaded question. So I tried to give you like a little bit of an answer in a couple different areas. Are there any follow-ups to that, or do you have any, or is that helpful?
No, that was definitely really helpful. Thank you so much.
Yeah, of course. Yep, Roma, I see a hand.
Hi, thank you so much for being here. So you said that you have interviewed like thousands of candidates, and so I was just wondering if and you could already tell like what like the interviewee's like weaknesses and strengths were within like 5 minutes of your conversation. I was wondering if you could share some tips or anything that you had about like interviewing and
Yeah, go ahead. Yeah, go ahead.
I was just asking, like, I was wondering if you could share some interviewing tips and any advice that you had for just new interviewees and stuff.
Yeah, of course. I'm happy to do that. I think someone had asked me in a private message for LinkedIn, so I put it up in the chat. And I see a bunch of you guys had added, so that's great. I will respond to you all after this call, but I think feel free to add me in if you have any further questions on it, and definitely don't forget to fill out the Google Docs if you haven't yet. I think the interview is really interesting. So I think I'm a firm believer that I think, look, every interview, right, you start kind of neutral with anyone. And I think a lot of times the way these interviews work, whether let's skip higher view for a second, because I think because these days most of the first round interviews are sort of done via like a recording, and we'll get to that in a second. But if you're thinking about either a Zoom Super Day or in-person Super Day, like usually it's very unlikely, I'll be honest, and having done a bunch of these, I could speak this with pretty strong conviction, that chances are people who are interviewing you have not seen your resume before. And that's how we've structured it. So like, as I was leading recruiting teams at GS, I think for us, it was like, can we get fresh perspective? So at GS, what we would do is we'd get two people, usually it's like a 2-on-1 type of interview. And it changes over time given availability, but usually it's like a director or a managing director along with an associate VP, or a VP along with an associate, some sort of combination like that. And look, recruiting is really important. I'm a firm believer in recruiting as being sort of this kind of access pool of talent. So I think, I think for me, as I thought about recruiting, it will always kind of start off like pretty neutral, right? Unless you know the person, which is very unlikely probably beforehand. And then it could either go kind of up, and then from there on, kind of, this whole first impression points. And I've seen countless examples of this to kind of stay with convention, but it could go up or it could sort of go down. If it goes up, you're kind of allowed 1 or 2 mistakes where, you can kind of revert back. But if you go down, you have to sort of impress us in like a couple different out of the way ways in order for us to come back. And this is the whole idea of first impressions, et cetera. So it's not really like new news to people, but how do you make that good impression, right? So I think the 3 biggest things I think for me is like, sort of, does that person have kind of a command of, why they're there, why they're talking to this firm, as well as their own elevator pitch, right? So if I hear like, hey, I'm Kaushik, I am the president of the Lion Fund, or I'm on the board at Columbia Finance Group, and I worked at XY this summer, last summer. I'm really interested in Goldman Sachs because I all the different people I've talked to, I'm really interested in M&A for X, Y, and Z reasons, and so thank you for taking time. So some sort of a cohesive, and I'm just giving you guys examples. Obviously, everyone's story is different, but some sort of a kind of crisp, kind of in control answer that's already like a plus for me, because I think it shows at least you come prepared to the meeting, or not like too big for the role. I think beyond that, I would say in the first 5 minutes, usually the question, something along the lines of like, why you, or kind of what are your strengths? And I think if strengths and weaknesses, that's usually like the first sort of question that we would ask in some of these interviews. I think having sort of a answer that talks about very genuinely your own strengths and weaknesses, I think that's so important, because I would say 70% of our interviews at GS and even beyond were fit-based. So like maybe I wouldn't even get to technicals to the last 2 minutes of the interview, or maybe the middle 15 minutes or whatever, but the bulk of your interview, where it's actually like a make or break it, is the first sort of like 10 minutes where you guys are really like proving the case, like why on a personal level, interpersonal level, on just a professional level, are you sort of a better candidate than everyone else? Everyone else coming to that door is going to know how to do the DCF question. Everyone's going to know how to do the depreciation question. Everyone's going to know the PE question. Like everyone's going to know the LBO question, maybe, whatever those questions are, the valuation, like the different pros and cons of valuations, all that stuff. For us, it was super important to help get to know you guys via your experiences, what kind of makes you unique, and et cetera. So I think that's the second thing. So kind of how well your stories, how well your answers, but also how well you just come across. So the first part is your elevator pitch and your control at the beginning. Second is kind of your stories, the impactfulness of kind of them, and also how you present it. And the third thing I think is really harder to measure, but I think you get better over time as you're an interviewer, is sort of this like, this kind of spark. Like, and what I mean by that is anything, right? So it could be, pick anything, but just something where it exudes like some sort of passion about you. A lot of people go through the interview just very much like, yeah, I was this, and then I did this, and I got straight A's, and then, I got a 1550 on my SAT, and then I did this, and then, I'm here, blah, blah, blah. And then they just kind of go through it. And then never during the interview do we get a sense of like, and I try to ask these questions like, all right, if you could do anything in the world, what would it be? Like not banking, or like if kind of what is something you're super proud of over your career or over your life? And so I just want to get a sense, like, some people are like, oh, I was like in music since X, Y. Again, I'm not saying these are the answers that I want, but I want to see some sort of like a spark that will be like, okay, like any problem because any problem I can put this person in front of, they will be able to solve it and then bring their own kind of energy and passion to it, similar to the way that they've approached these other things. And the reason why that's important is, look, banking isn't necessarily hard, or private equity isn't necessarily like the hardest job. It's not rocket science. You don't need a PhD. Like, you don't need to know all these things. But I think what you do need is the ability to work well with people, kind of be like that self-starter, like a driver of yourself, and then also like be impact minded, right? Like how can you maximize impact in kind of what you do? And those are the things we're trying to measure in these interviews. So I think even if you look at the banking training, you know, and you think about it, like every professional on there, like we have a whole module on recruiting and interviews and what bankers want to hear. And then I think the consistent theme is like the fit interview, like makes or breaks the interview. So like the number one thing I see is people come in with like all sorts of knowledge about like warrants and like, you know, like option dilution and all this stuff. And then they like just don't work on their own stories, right? I think so that's sort of the really important part. I know I kind of went on a sort of I hope that's helpful, Roma.
Yeah, definitely. Thank you so much.
Yeah, you got it.
Awesome. Thanks again, Kaushik. I know we've
Oh, Melanie had a question. So Melanie, you can totally reach out to me on LinkedIn. I know if I didn't get it, or even Instagram, because we check it, the team checks it a lot. So feel free to reach out. Definitely we'll follow up with you guys on the training stuff. Sean, we're at it. I mean, we're at 4 o'clock, right? Or do you want to, do you want to end?
Yeah. I was just going to say, I'm going to throw the spreadsheet on the Facebook event page as well, and also put Kaushik's LinkedIn on there. So
sounds good. And you can let them know if they're interested in the trainings where we're doing like that $300 off. So it's literally it's for like $400, and I'm giving it for all my Elevate students just for $99 because I think, I mean, you guys, totally up to you if you want to take it, check it out. Just email us and then we'll take care of you guys like offline. And I'll let Sean know about that as well.
Yeah, definitely.
Okay, cool. Really good meeting you guys. Melanie, I didn't get to you. I'm sorry. You could reach out to me. I will definitely respond. But yeah, I hope you guys found it beneficial. It was really nice to meet you guys. Columbia, look forward to working together. Look forward to having you guys on some of our networking events and recruiting events and all this stuff. And yeah, best of luck and keep us posted. Keep me posted. Thank you, Sean and team, for organizing also.
Of course. Thanks again, Kaushik. Thank you.
Bye. Thank you.
Thank you.
Everyone.
Cheers. You got it. Bye.